In your mind, what's the appropriate path?
Good morning, Dom. Yeah, that 75 basis points seem to be quite locked. And, it's an interesting dynamic, right? We actually had speculation about 100 basis points right after the CPI last week because it was so, bad. It was just not a good number at all. But it's about expectations. So the Michigan survey shows the Fed's message is getting through to certain groups of consumers. And that is changing, I think, the long-term expectations. Same thing for the New York Fed survey showed long-term expectations are declining. I think that gives the Fed at least comfort that they don't have to slam the brakes by 100 basis points and can do the 75 basis points, which in Governor Waller's view, that's huge, as he said. So it is a big rate hike. So I think we're locked for 75. What really matters is what happens in September and how restrictive Fed policy becomes. The market seems to be saying something like 3.5% of a Fed funds rate by the fall. That seems right, but the data is also very important to watch because we are in a slowdown. So it all may change as we come fall.
So, I mean, the timing is pretty good here. And what I mean by that is you have a meeting this month, and then you've got a break, right, in August, and then you come back for another meeting in September. Does that, in your mind, timing-wise, give the Fed a little bit more cushion with regard to evaluating that data? Because they are, of course, data-dependent. And what exactly would they need to see for that next step if it's still going to be 75 basis points or maybe less? Is there a possibility it could be less?
Yeah, so far what we've gotten is the indication that as 75 was delivered, it was this message more about 50 or 75 for July, which I think in the market's mind also means 50 or 75 in September. I know what's key, Dom, is that the data itself is not just confidence data or growth data, but it's really that the next CPI report does show a first step to slow down. And I think the commodity prices declining over the last period will affect that CPI report in August. And that will be indeed somewhat of a breathing room to say we don't have to continue on 75 basis points, which Powell has said that's not something they want to make as a common rate hike. So the Fed has some time here to evaluate. Data that we had just over the last week was not strong enough to go for 100 basis points. So I think we stay on this track from 75 downshifting to 50 by September, and then making policy restrictive. And then they will reassess how much of an impact that truly has on the economy and inflation.
All right, speaking of economy, inflation, and everything else, we kind of have an idea, at least, maybe an inkling, although it's very confusing right now, about the inflation picture here in America. I wonder what this story is like economically from the emerging market perspective, given what we've seen with the dollar value, the U.S. dollar, and its value versus just about everybody else out there. Is that dollar story not being played out enough right now? Are we not talking about it enough? Is it going to be a significant driver of not just what's happening here in the U.S. with our relative purchasing power, but also what's going to happen with the emerging markets and the strength of their currencies and economies?
Yeah, I think it's a major story, Dom. I think we're just seeing the effects from a strong dollar coming through. And over the weekend with the IMF World Bank meetings, it's now becoming a topic of discussion among policymakers. To one extent, the dollar can strengthen, but if it gets too excessive, it puts a lot of pressure on emerging markets. They've borrowed in dollars, they have current account imbalances, and so that strain on the financial system globally, as the dollar gets even stronger, is really something that will also, the Fed will keep in mind, by the way. They're not, I think, oblivious to a strong dollar. But at this point, the strength of the dollar has some dividends. We're seeing it playing out in the commodity market. That aside from supply-demand dynamics, the dollar does have an impact there. And secondly, it's about basically an economy that's not yet in a recession. The U.S. economy is, I think, not sliding right now in a recession. So that strong dollar about Fed policy and U.S. economy, too, at least gives to the market some comfort that we're not immediately in a major contraction.